Hello everyone and welcome to this first trading episode here with our trading cult prop trading challenge. So as you can see here, we are on the sterling yen, spotted an opportunity, selling opportunity here that I'm going to break down for you, and the objective being to show you step by step, not only in theory but as well in practice, how I'm going to pass the challenge. So first thing that is important to say is that these baskets, these tradings are going to be recorded so that I can summarize the trading. Obviously I cannot keep commenting live if a position is going to be open for hours or days. It just makes no sense. So I will take the opening, explaining the position opening and the reason behind it, and getting close to the end as well. Hopefully those positions will not be open so long, so I can just accelerate the middle. If not, I'm going to be cutting it if it's 4 days. So there is a sterling yen opportunity. Why? Because we are hitting a very strong triple bottom here. As you can see, the price is touching this key area just below 196, 195.80 area. And on the 31st of December, it touched it again and bounced, and on the 20th of December. So I'm going to explain it here by putting a couple of circles. So let me show you here the triple bottom. So here is the circle number 1, the first support, the second support being at exactly the same level, and the third support. So why triple bottom is an important scenario in our case? Because first of all, also number 3 is a Fibonacci number that has its importance. So it's not just the first time that it will touch it and it will touch it again. No, the fact that it touches significantly, this significant level 3 times in a row. As you can see, the price rose and then really dropped sharply and touched this price again. But on the resistance sides, on the other side, the resistances are lower. So what is happening? We had on the 18th and 19th of December this strong bullish momentum. So the prices rose to the highest peak around close to 199, and then they retraced. They retraced to hit a support level. It could have been higher, it could have been lower. Prices decided to bounce at that level. Then they rose again. As you can see, I'm drawing a line on the resistances and on the support. Then the second resistance is lower. So the prices fails to go higher. And then the third resistance is even lower. So this is a confirmation that really the bulls are losing in strength, and the bears are going to keep pushing until the breakout happens. And this is what I am hoping for. That's why I decided to take the sterling yen first. So this is the price action analysis of support and resistance and breakouts. This is the first lesson. Then the second one is on the power of correlation. You will see throughout the trading that I never trade only one position in a row. There will always be a basket of position. So as we can say, we don't put all our eggs in one basket, and this is the same for our position. I don't want to put all my positions in one basket, only in one risky basket. Why? Because then it's a 50-50. If I put all my volume, for example, on the sterling yen decide to rise for whatever reason. I cannot control the future, and there is no guarantee in trading and in anything. So then I'm in a loss and there is nothing I can do. I spot an opportunity with the euro yen that is very correlated with the sterling yen. As you can see, it's touching here support that has been touched on the 31st, just like the sterling yen, and that has been touched on the 20th of December as well. And this correlation is extremely important. Why? Because it shows me that the prices of the euro yen and the sterling yen are moving together in pair. So instead of opening all my volume on the sterling yen, I can divide it between the euro yen and the sterling yen. Not only on the euro yen and on the sterling yen, but if the yen is very correlated, the yen pairs are very correlated, then I can find another one. And hopefully I will, because I will also later on open the sterling yen. This is the second lesson of this first trading session that we have here, is that first I make my analysis. I'm going to choose an interesting pair, but I'm going to see also if it's correlated. And if it's correlated, obviously I will explain a bit more on details throughout all the videos, because there will be a lot of trading. We are only on the phase 1, then we have the phase 2, then we have also the funded. So there will be a lot of trading sessions. So I put my range here in blue, so to confirm again that, as you can see, same thing on the euro yen, we have those 3 areas here, while the supports, they're really failing to, the resistances, sorry, are really failing to mark new highs. So the supports here are on the same level and the resistances are going lower and lower. So this is a general confirmation that the markets will usually enter in the downtrend phase. So we have our 2 positions here. We have our sterling yen, we have our euro yen. There is a volume of 10 lots per position. This is the volume that I've decided. Obviously, this is the risk management and the money management strategy, that the volume, the margin required requirement is very important, and this is something that also I will be discussing throughout the videos. There is no any exact science. It's what we call the risk appetite. So I can open 1 lot, but then I can try to make 0.1% or 1%, but then I'm gonna have, based on the pip value of that 1 lot, which will be $10 per lot, I'm gonna have to make a lot of profit even to reach 1%. But my strategy is closer to the day trading, not so much scalping, because I'm not trying to scalp the market and take 5 pips and 3 pips, which on top of that is not allowed in the prop trading, but is more on the day trading. So I'm going to be looking at 20 pips, 30 pips. So if I take 10 lots, let's say on the yen pairs, the pip value is a little bit lower. But if we say, even if it's at, let's say $8, so 10 lots is $80 per pip. So if I take 10 pips, that's $800. If I take 12, 13 pips, whatever, that will be $1,000. So even just with this amount already of profit, I'm still not even reaching 0.5%, because 1% is $2,000 in my $200,000 account. That's the reason why I want to open more positions, 10, 20, 30 lots, and build up on that. So it's also very important. This is a very important part of your prop trading or your trading journey in general, is your position sizing, is understanding what's the right volume for your strategy. Because many times you will see people trading too high volume when their strategy, your investment horizon is in the 50 pips, but you take a volume so big that at 10 pip or 20 pip drawdown, you start to be afraid, or you start to want to close your position. Then you have to simply to reduce your volume. On the other hand, there are certain strategies that will, you will look at a profit horizon, for example, of 20, 15 pips with some kind of day trading, but your volume will be so low that you will have to push to keep it, and then the market will retrace. So it's important to understand, based on your strategy. If you have a strategy that will aim at making 50 pips or 100 pips, then you have to adapt your volume based on that target. And my volume is opening volume of 10 lots, and even here with the 3rd position, in order to secure my targets. And my target also, I will explain it. So as you can see here, first of all, I'm going to analyze the sterling yen. The sterling yen here is doing exactly the same thing. We had a very strong bullish momentum. It marked new high, but then now it's failing to mark a new high while it's touching the same support area here. So I have a good feeling about, as we are just breaking even as well, you can see the profit and loss in the bottom started to go into profit. I still opened sterling yen as well. So we had 3 positions in our basket, in our yen basket. Now the point that I wanted to mention is also about the strategy, the way that you want to pass the prop trading. As you can, I'm going to explain it again. It's important for me to lay the foundation, but I'm going to go obviously in a lot more details in the future videos. But as you can see in the prop trading world, there are certain rules that you have to respect. And what is the best way to fail to respect the rules is to open as many positions as possible. The more you open position, the more you will have a chance to infringe a rule. Let's say if you open 100 positions, maybe 1 of them, 2 of them, you're going to forget and you're going to trade during the news. Because you were excited, you open a position and you say, oh, by the way, I just want to open this sterling, and there was a sterling news and you forgot at that time. So it takes a lot of discipline to make sure that we don't get breached. And what is the best way to avoid being breached is by trying to reduce your trading to the maximum. Obviously not opening one position and doing white or black. That's not the point at all. But by trying to take as much profit as possible instead of dividing it into many trades. So I'd rather take a good volume, aim for 2%, 3%, 5%, if possible, if the market is generous, keeping my positions open, respecting my risk reward, rather than trying to take 0.1, 0.5% and opening so many positions every single day. As you can see here, I accelerated the time because this basket actually lasted for about 3 hours. And we are at minus 2000, so we touch around -1 to close to -2%, I believe, in drawdown. You will see it by because we haven't lost any time. I just made it faster. So basically, you will see the profit and loss going to -2000, -3000, and then it went back to profits. Now I'm gonna give you another lesson, because this is the advantage of recording my basket, is that after I can take my time to show you the best and to comment you with the best lessons about this basket, is that you can see I put those 3 pairs one after the other. You can see that they are correlated, but you can see that they don't move exactly at the same time. Sometimes you will have one pair that's going to drop earlier than the other. And this is what I call the snowball effect. What is a snowball effect? Is that a snowball is going to start to roll and grow and grow and grow and bring more snow with it and grow as it falls, as it rolls down. Well, this is the same thing. You will have the yen are correlated, so usually they will move together. But as you can see, all the candles are not exactly identical. Sometimes one of them is going up. The sterling yen might go up. The euro yen might be a bit flat. Then the euro yen will catch up. Then the Swiss yen will drop a little bit before. And this thing that I call the market inefficiencies, that they are not perfectly correlated. So this lack of correlation for me is very interesting, because usually one is going to start to draw the other one. And this is, as you can see, the sterling yen is the one that I chose first, because I had my conviction on the sterling yen, and is the first one that totally broke out. So my analysis was correct. But the most interesting thing about the snowball effect is that it's drawing in second position the euro yen, that is doing the breakout, is at the lowest point here that it's about to break out. It already happened on the sterling yen. You can see it's on in uncharted territories here, very low. Then the euro yen, and on third position is the Swiss yen, that is about to drop to the lowest point of the day, but it's not the lowest point of the previous days. As you can see, the 31st was even a lower day, but it doesn't matter. The daily breakout, it's happening, and this is the snowball effect. And this is what confirms me. It gives me an additional confirmation to keep my basket of positions open, because as much as if I only had the sterling yen open, I would say, okay, now I have to be careful, maybe a pullback and all my profits is going to be gone. But now I know that the euro yen is still at the beginning of its breakout, and the sterling yen and the Swiss yen, sorry, it's following as well the snowball effect. So I say, you know what, I still have a bit more margin. I'm going to keep it more until I reach 5%. So I didn't know that I wanted to take 5% initially. I could have closed at 2%, 3%, but because the snowball effect was so beautiful, I just kept it more. And this is how we took 5% in the first basket of the phase 1 of our 2 times evaluation challenge. I hope you enjoyed this video. I will see you for the following video. We are still on phase 1 because we have 8% to reach, and hopefully you enjoyed and you took some valuable lesson. I'll see you soon for more trading. Until then, take care and ciao ciao.